Hello all, this is Dan Monahan. As many of you know, I am an independent broker in Wisconsin here, specializing in all things health insurance. I do Medicare stuff, I do small business health insurance, but today we are going to be focusing on the individual and family market, mostly the ACA, but also some other alternatives for 2026. So as you can see, I've got just a few slides here: carrier updates, premiums and tax credits, income limits to consider. There's a new HSA option, and then some alternatives to the ACA. Before we jump into that, let's just cover quickly the dates for open enrollment. These are the same as last year, so November 1st through December 15th. If we complete everything by the 15th of December, all those changes will go effective January 1. If we don't get it done by the 15th, then we have then till the January 15th. So any changes made between December 16th and January 15th will go into effect on February 1. And this is obviously, it's just the time of year to update your application and look at new plans for 2026. The big thing to work on or get ready is what you think your projected adjusted gross income will be for 2026. We can also update, other things in the app if needed, but that's usually the one thing I find people don't really know off the top of their head. So if you want to work on figuring out what that is, that will speed things up come enrollment time. And as noted here, the plan details have not been released yet. They typically are released right at the end of October, guaranteed by November 1st. So as soon as that happens, I will send an email out letting you know. The first thing we're going to cover here is the carrier updates for 2026. There are quite a few of them, and I know many of you have received letters about your plan not continuing for 2026. So let's just review those quick. Chorus Community Health Plan is unfortunately canceling all of their plans effective the end of the year. So all of these changes will go into effect end of 2025, December 31st. So your plan is in place with no changes until the end of the year. We just need to find you a new plan if you are one of those that received a letter saying your plan is going to end. So again, Chorus is exiting entirely, so they are not offering plans in any counties. Common Ground is continuing in a few counties, but they are canceling a majority of their plans. You can see I've got all the different counties listed here that they are not offering plans in. So if you reside in one of those counties, we need to find you a new plan. Molina Healthcare, they don't have a very big presence in Wisconsin right now, but there are some situations where they made sense. Up north, they were competitive a little bit, so but they are entirely exiting the Wisconsin marketplace as well. And then lastly, as far as cancellations go, Quartz Health Solutions, they are also leaving a majority of the counties. Again, they're all listed there. They're still in a few throughout the state, but again, most of their plans are being canceled effective the end of the year. So a lot of change. That's way more cancellations than in the past. The carriers are sticking around are Anthem, who they did add Aurora actually the beginning of September. So if you have Anthem, you can now see Aurora, and that will continue into next year. They still have Ascension and Pro Health as well. And then Network Health is also continuing to offer plans. It's looking like they may be the only carrier that's going to have freighter in network next year. So that will be basically your option if you need to have freighter in your network. I don't have United Healthcare on here. They don't really have any changes. Their network is staying the same, which again is basically Aurora and Pro Health. So that is a summary of the carrier updates for 2026. Okay, so next we are going to talk about the premium increases and then touch on tax credits a bit. I'm sure that you have heard, if you're paying attention to the news at all, the ACA is in the news a lot these days. In Wisconsin here, there are some premium increases coming our way. We don't know any of the particulars yet. We just know generically by carrier, what their average rate increase, excuse me, is across the state. So it ranges anywhere from 7-8% to 20 to 30%. So we will know that again come the end of October. The big unknown that I just wanted to remind everybody is that we don't know what's going to happen with the tax credits. This is rarely covered in the news articles I've read or the bits I've seen on TV. The tax credit could go up equally or more than the premium increases and cancel all that out. So don't panic quite yet. This is all kind of a complicated equation. It's based off of the second most affordable silver plan available in your particular county. So it varies by county by county. If that plan goes up relative to the rest of the marketplace, then tax credits are going to go up, and that will again help to cancel out part or all of the rate increase. It could go the other way too. We don't know. So time will tell. And again, as soon as I know that, I will let you guys know. The last thing here, I just want to note, we'll talk about this a little further in the next slide, but as of right now, this is one thing that's being negotiated at the federal level, but they are going to re-implement the subsidy cliff or cutoff at 400% of the poverty level. So they did away with this cliff back when they passed the Inflation Reduction Act. So for the past few years, they just slowly phased out the tax credits. So a lot more people were qualifying for tax credits than will in 2026 if these don't get extended. Again, I'll talk about it a little bit more on the next slide. In this slide, we are just going to talk a little bit about some of the income limits that you should be aware of with the ACA. So in this chart here, you'll see the far left, that just shows the number of people on your tax return. So that's how they determine your tax credit, and everything within the ACA is the number of people on your tax return and your adjusted gross income. So the first red column there is the cutoff for adults for Badger Care. So this is the state Medicaid program. It's equivalent to the poverty level. So if you're at 100% of the poverty level or below, you will qualify for the Badger Care Plus program as an adult. And that is the way you're going to want to go, because when that happens, you are disqualified from receiving any marketplace tax credits, which is going to make all those plans unaffordable. So that is the first column there. The next three that you see here in green highlight the cost share reduction. So if you fall within these limits, which is basically, if you're from 100 up to 250% of the poverty level, you're going to receive some sort of reduction in your max out of pocket, your deductibles, and copays. You can see there's 3 different levels. Basically, the lower your income, the better plan you're going to qualify for. So if you're in that green range of income, we should discuss silver plans, because those will be a little bit better value for you. Next column here is the kids qualifying for Badger Care Plus. So the income limit is a lot higher. It's at 300% versus the 100 for adults. So if a family of 4 here, for instance, if you're below $96,450, the kids would qualify for Badger Care. Parents are going to qualify for tax credits and go through the marketplace. So 2 separate, plans for the family. But that's essentially, again, going to be your best bet. If the kids qualify for Badger Care, they're not going to qualify for tax credits in keeping them on your plan. You could still keep them on your plan if you really wanted to, but you're going to be paying full price for the kids. So the other last thing that I don't have on this slide here, but this is also for pregnant women. So they also qualify at 300% of the poverty level. Pregnant women qualify for Badger Care. And lastly is the column 400% here. That's the new subsidy cliff, which again, this for those of you that have been in the marketplace for a while, this was around before the Inflation Reduction Act. and then they enhanced the tax credits with the Inflation Reduction Act, which allowed people that make a lot more money than this cutoff to still receive tax credits. I have people, families of four right now, making 200,000+ a year. They're still receiving tax credits, and that obviously is going to be a significant change. So we'll see what happens. This is the big thing right now that is being negotiated with our federal government. So we will see what happens, and I'll obviously keep everybody posted if we hear anything on that. So that is a summary of the income limits to consider with the ACA. Okay, so now a little good news here. For 2026, there will be a new rule that all bronze plans will be HSA eligible. So this to me is a pretty big deal. Currently, right now, you need to have a high deductible health plan with no upfront coverage to qualify for an HSA, but now they're making all bronze plans and catastrophic too for those that are younger are HSA eligible. So this is going to create a double tax benefit in the marketplace for those participating in the marketplace. So I really highly advise, if you have a bronze plan, in my opinion, there's no reason to not set up a HSA plan at your local bank. You just go to your local bank and set it up. When you do that, any deposits you make into the HSA in 2026 it's going to lower your adjusted gross income by that amount. So you could put up to, as a family, the contribution is $8,750. So if you contribute that amount, not only are you not getting taxed at the state and federal level, which has always been the case, you're also going to be receiving a higher tax credit because your income is going to be lower. So that could be, for families, that could be an extra $150 a month in tax credits that you'd receive with that lower AGI. So I'm sure people have questions on this, but again, just wanted to bring it to your attention, and let's talk about it when we have our individual conversations. Next, we're going to talk a little bit about the alternative options to the ACA marketplace. Before I get into that, I just want to say that if you will be receiving tax credits in 2026, meaning your income will be at or below the 400% poverty level, then the ACA marketplace plans are most likely going to be your best bet. So this slide is really for people over that income level, just to give you some options to consider. The main one, in my opinion, would be a short-term plan. So I'm just going to run through these bullet points quick. The positives are in green. The main reason people switch to these plans is it's significantly lower premiums. So the rates, we don't know ACA quite yet, obviously, but we do know some of the short term, and it's looking like they're going to be close to half for a similar out-of-pocket max as the ACA plan. So obviously that's why people go this route. They do also have larger provider networks when compared to the ACA. So most of the carriers have all of the hospital systems in our area are in network. So that's a little bit of a benefit compared to the lean networks in the ACA. And then all those in red are the reasons why these plans are so much lower in premium. They have some limitations. So the big one is they do not cover pre-existing conditions. So this is an obvious deal breaker for some people. If you have a major pre-existing condition, you do not want to go onto a short-term plan. You're going to want to stick with the ACA or possibly, a group plan. But that would be a deal breaker if you have a major pre-existing. The others, just to be aware of, they don't cover most preventative care. Some have some care, but it's limited. They have limitations on prescription drugs, and some have no coverage for prescription drugs. Other things, there's no pregnancy or childbirth coverage, and there's also limited or no mental health coverage, including substance abuse treatment. So again, these are all things to consider. We can talk through more details on whether or not you're comfortable with these limitations, but that would be the main alternative to the ACA. The other two are the small group employer plan. The big one there is you got to have a business, and you got to have at least one other person outside of your family that is going to participate in that plan. The other thing that you may have heard of are the health sharing programs. So these are not insurance. There's a ton of options now out there. Like the short-term plans, they have various limitations and exclusions, so you really want to make sure you're understanding them. There's a lot of variation from plan to plan with those. The reason people go with these is the premiums are similar to short-term, a lot of premium saving opportunity there. So I don't do a ton of this. I know enough to have a short conversation, but if you really want to get into it, I have somebody I could refer you to. So that's a quick summary of the alternative options. Lastly, I just want to thank everybody, for listening to the video here. Hopefully that helped you out a little bit, answered a few questions, and also wanted to thank everybody who has given my name and number out over the years. I can't thank you enough. That is the #1 way I grow my business. So again, as I put in almost all my emails, if there's anybody you think I can help, please pass on my name and number. You can also share this video with them. That would be greatly appreciated. And otherwise, as you can see here, you can just schedule a call. I'll be sending a couple more follow-up emails as well with the ability to schedule calls come open enrollment time. So thanks again. Have a good day.